Hey, hello, and welcome to the stock-specific class here for Thursday, February the 24th. As always, if you have any questions during the week or any day I don't get to in the live class, make sure you send those to jerry@traderspro.com. A lot going on today, and significant development as far as the charts are concerned. And that's something I want to take a look at. Let's start off with the direction alerts. With the selling yesterday, and we pushed into the kind of the extreme reversal risk, bullish reversal. This means the market is oversold, so we've entered that oversold state with momentum. Breadth is still not quite there, but it is in the high area. Meaning the market is oversold. Sentiment is still, it's in the complacency. It's still high, and it's been high for a long time, and it's been something that's kind of concerned me that it hasn't dipped a little bit deeper on some of these sell-offs. The buy-sell ratios are widening to the sell side. The sell side are outpacing, the sells are outpacing the buys, and it's getting to kind of an extreme level. You can see it's been a little bit more extreme. We'll have to see how these things look with today, because it's not factoring in today's movement yet. Although today has been so far been forming a little bit of a bullish reversal, which I'll talk about. And one of the things I was talking about on Tuesday was that, the potential of getting close to a market bottom. And there's some things that I think have been significant that have taken place that could at least maybe put in a near-term bottom. If it's the bottom, you never know quite for sure. But there are a lot of things that are pointing to a possible tradable bottom right here, and something I'm going to be taking advantage today in the portfolio. Sentiment is low near the buy range here, so that, definitely some room to be able to move higher at this point. Let's get to the charts. And look at some critical areas here. All right, now one of the things that I was pointing out on Tuesday, and I've been pointing it out for a while, is the significance of this January 24th reversal. We had a reversal, we had a drop, and then we had a reversal day that day. It opened, it gapped down at the open, sold off to an extreme, came all the way back, and closed higher than where it opened. You see that type of price action that shows you that buyers are there. Volume was very high that day. We managed to rally off of that, and that became a very key low, especially as it relates to going back here. Let's look at a longer term chart here. Look at a 1-year chart. That support resistance area was going all the way back to this area right here, that extreme. Now yesterday we sold off. We tried to rally. We opened up higher. We tried to rally, sold off, and we closed right at that support level. Now, something to keep in mind, this is just a little bit of a side note, but whenever you have a stock that comes, or a market or whatever, that comes back down to a support area, and it closes at the lows of the day right at that support area, the chances of that support area holding are very, very slim. It usually doesn't hold. So it wasn't a surprise that we dropped below that today. In fact, let me zoom back in again so we can see a little bit more detail of what I'm talking about. So yesterday, here's that support level right there. We were dropping, and we closed on high volume, closed right at the lows of the day, right at that support area. There's a tendency to look at that, especially if you're trying to be bullish. There's a tendency to say, oh, well, it stopped right there. Maybe that support area is going to hold. But when it closes at the lows of the day, it's usually not going to hold. Now, what you'd like to see, if you think that it's holding or could hold, is you'd like to see it pull up off that. If we would have hit this level earlier in the trading day yesterday, and then came off the lows of the day, even if we would have had a candle that looked like this or something that came all the way down and came off the lows, had a little bit of a tail right there, that would have shown you that there were buyers at that area pushing things back up. And that would give me a little bit more confidence that support area could hold. But when there was no buying to push it up, and you're right at that level there, nothing was pushing it up, there's no buyers there. So the probability is, unless something happens that creates buyers, news comes out, that could always happen. But from a probability standpoint, that support area is not going to hold. So it wasn't a shock that we gapped lower today. I was fully expecting that gap down today. And with that, and we'll look at the VIX here in a second, the fact that the VIX was acting in a way that was pointing towards a possible bottom. The way this is reversed today, this is at least a short-term tradable bottom. I think we're going to rally off of this. Now, how far we rally off of it, I don't know. I thought this was a deep enough pullback right here when we got that January 24th reversal. We only lasted about a week on that before rolling over. Could the same thing happen here where we get a little bit of a rally up into this area and then roll over? That's definitely a possibility. One of the reasons why I think this is acting more like a bottom as well is that, one of the things I've talked about for a couple of weeks now is that I felt like there was going to be a market sell-off when Russia did finally invade Ukraine. I thought two things would happen. I thought the market would drop off of that news, and I thought oil would spike. And we saw both happen. The market obviously having started dropping, after the Olympics in anticipation of that drop, and then we had kind of the flush out gap down move today that then has reversed itself. Now, I was expecting that to be kind of the culminating event to mark a bottom. Very often you look for something that kind of triggers the bottom, triggers the final selling. If people were waiting for the invasion to start selling as confirmation, they're usually going to be late. That you always have to anticipate. And that's what I was doing in that case, was anticipating. That's why I was staying out of the market. The only trades I was in were the oil trades because I felt those could spike. Now, they haven't spiked as much as I had hoped. We did see a big spike in oil today, but not in the oil stocks. I'm going to hold on to those. I'm going to hold some of those based on my stops to see if this is just temporary. There is that potential for oil to move considerably higher, and I would expect those oil companies would benefit from that. But I'm not seeing that yet, and I have no problem, jumping out of those. It would be a little bit disappointing because I was expecting to make a little bit more money on that trade, that anticipation that those oil prices would spike, and I haven't seen it yet. But these were all things that were, again, kind of signals that could be marking that bottom. Now, if I go out a little bit to a longer-term chart again, one of the things that does concern me was I was looking at this yesterday. Obviously, I didn't have a class yesterday, but we were going to close right at that January 24th low, which, again, lined up with resistance from back here in May and support here in July, resistance here in June. It's a significant area there. So I was looking, well, where's the next significant support area? And the next significant one was down here at about the 405, 406 kind of area right down in here. Well, we didn't quite gap all the way down to there. We're kind of right in the middle here, but we have this bullish reversal. We gap down here. We're moving up. That's a very bullish reversal sign. That means buyers showed up today at the lows. They didn't push it lower. They were buying, and whether that was buying to cover their short positions, which in essence I was doing. I had put options, and I was selling those put options. But if I was short this stock, I'd be buying back those shares to close those positions out. So that whenever you see a reversal after a sell-off, a lot of that initially is short covering, people taking profits on their short positions. But there are also buyers that were showing up, and that's why the volumes have been pretty big. Now, is there other support in that area there that we could look at? Well, there's a little bit of support from back in here. It's lining up to that where we opened. But I wouldn't categorize that as significant. I mean, a little bit of support into here. Had a little bit of reaction on these days right here in that area. But again, I just don't see it as major support. Now, I'd have to go look to see if maybe there's sometimes it can be a moving average. I don't have moving averages here on Traders Pro. So it could be it's reacting to a moving average. I'll have to double check that. The main moving averages that markets tend to react to are like either a 50-day, 100-day, 150-day, or a 200-day moving average. Those are all ones that a lot of technical analysts use. I'll have to look to see if there's any reaction to some of those. But it also looks like with a reversal candle here, you could have what looks like an ABC correction, meaning that this could be the bottom, and maybe we're going to start working our way back up. Now, a lot of times bottoms happen when it doesn't feel like you want to be buying, and obviously people are a little bit scared with what's going on with this whole conflict and how bad could it get. I will tell you that markets will react to these war type stories initially, but they tend to stop reacting to them pretty quickly because the focus is always on the economy and on companies, and there might be specific companies related to the conflict that could get beat up over time, but the initial reaction can be to sell, but then the market sits back and say, well, wait a second, am I overreacting here? We're not even in this battle, and so is it really affecting us? There tends to be an emotional reaction first, but it usually doesn't last very long. Which means the market is already now looking at what the next thing to focus on is, and what I've heard some rumblings is that with the selling and with this little bit of fear that's come in the market these last couple of days, that it's possible that maybe the Fed has backed off a little bit from maybe they were considering a 50 basis point hike in March, and maybe now they're just going to stick with that quarter point and just take that initial smaller step and just see what happens. The market, if that's the case, the market could be reacting a little more bullishly to that. The bottom line is we don't know. I mean, to try to figure out what's going to happen next from stories that are going on or news that's happening or even fundamentals of companies it's almost impossible. Let the big institutional traders figure that out. Let them figure out what all this means. Let me just see what they're doing. And what I'm seeing today is that they're buying, or at the very least, they're covering their short positions, which is a bullish type of behavior. Now what I want to see is, do we see follow through to that? And with every bottom I've tried to trade, it doesn't. You don't always feel confident that you're at a bottom. That's because you're at a bottom. You don't have that confirmation yet that things are moving higher. And so you have to. It is a little bit scarier to jump in. But when you really think about it, if you're using good money management, trade management, and you have a plan for your trades, where you're probably wrong. What's great about a day like today, there's a lot of individual stocks that are looking the same way. They open lower, they're trading higher. I'm going to be adding a lot of stocks to the portfolio. I'm going to be loading up right here. Maybe this is a shorter term bottom, but what I'm doing is I'm going to put a stop right below today's low. We shouldn't go below that low if this is a bottom and we're moving higher. The price action today is strong enough, and the reversal is strong enough. We shouldn't drop back below that low. If we do, then stop me out. Take my loss at that point. We're not at the bottom yet, and who knows how ugly things could get at that point. But let's move on to, well, we can look at other charts as well. I mean, the Dow had already, well, it also had got to that January 24th low yesterday. It has a bullish reversal candle down here. The NASDAQ 100 broke that January 24th low yesterday. So, I mean, that's what made it almost no-brainer that the other indexes were going to do the same. I mean, it didn't even wait till the next day. But look how much it's recovered. In fact, the NASDAQ has gone positive. It's trading now higher than where it closed yesterday after all this is taking place. It's a very bullish behavior, not to mention the fact that the risk-on type attitude is going to be with those tech stocks. They're mostly found in the NASDAQ 100. So this is one of the reasons why I went straight to, computer and technology sector, and there's a lot of stocks I'm going to be entering from the computer technology sector, because if there's now a little bit of a risk-on trade, and I've seen some of these reversals that have fizzled out before. So again, I'm not trying to say this is the bottom. No one can know where exactly the bottom is. I'm just saying there's a lot of bottoming qualities to what's happened over the last couple of days, and I'm going to try to take advantage of that. Russell 2000, again, almost gone positive. I have gone positive on its reversal here. In fact, the Dow is the one that's down the most compared to the other indexes. And then I want to go down to the VIX. Well, here's oil. So oil did really spike higher at the open, but it did the same thing it did yesterday, or 2 days ago, where it opened higher and then closed lower. It had that bearish reversal candle, and that's a pretty strong bearish reversal candle right there. Now we'll see if that ends up, those types of bearish reversal formations can be very short term. Maybe it just means it pulls back for a day or two and then goes forward again. We don't necessarily want to say that this is going to start a larger correction in oil. That's a pretty big reversal, but there are other factors that could, like I said, the patterns, the candlestick patterns themselves tend to be very short term. If we can sometimes apply them to larger patterns that are taking place to draw larger conclusions. But other than that short-term bearish reversal, and you could say that we're also in the extreme reversal risk area here. Could it be a pulls back right here? Well, it could pull back or move sideways for a few days and consolidate that and then take off again. So I'm not here yet to say that oil is going to go through some larger correction. It's hard for me to see that with the conflict that's going on and the pressures for oil to go higher. That seems to be the path of least resistance right now. But we can see a lot of volatility there. Now, the dollar made a big move. If you go back to the market update on Tuesday, we were looking at this as a corrected move for the dollar to go lower. This whole thing, conflict has caused the dollar to strengthen. So really, it's a big question mark now with the dollar on what it's doing. Because technically, with the high today, it's reached a higher high, and with the trend behavior before, it was indicating a stronger probability that we were going to go lower. I think it's important. Sorry, I got a little bit of a cold. I think it's important to point out that even though I teach you these trend analysis behaviors, there's always events that can change those behaviors. You could have a stock that's stair stepping up and it has a correction. You're saying, man, there's this thing should continue higher, and based on everything you can see, it should move higher. But then some unknown event. There's always unknown events that can come out. Can spook the market, and that thing can open up down here, and suddenly you've reversed the trend. Maybe we are reversing back into an uptrend in the dollar. We'll see how things kind of play out over the next week or so. See if anything changes between now and the next update. But here's what I want to get to with the VIX. So we got an elevated elevated VIX. We moved a little bit higher yesterday, and then we had this big gap up with that big gap down on the S&P, and it's done the opposite. We gapped down on the S&P and we've rallied up. We gapped up on volatility and we've moved lower. Now, if you look at each time we've gotten kind of that bearish reversal candle. Here was one right here. We moved lower off of that. Here was one bearish reversal candle. We got a little bit of a move down off of that. There's kind of a couple bearish inside days that led to a pullback in volatility. When we've had some of these significant bearish reversal candles, we've seen a pullback. Here's one right here, a pullback in volatility. So again, that formation, when it gaps down, when you're going down, 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 and you gap down and you close higher than where you opened, but still lower than the day before, or even if you do manage to go up higher than the day before, which is probably what's going to happen in the NASDAQ, that's a bullish reversal. Typically, in most cases, you're going to get some sort of a rally off it. But remember, these candle formations are very short term. But if you're saying we've been dropping and dropping relentlessly, and now we've had this bullish reversal candle, there's probably a good chance we're going to rally for a few days, at least a few days off of that. You combine that with a bearish reversal candle and volatility, it means volatility should drop. Volatility would drop if the market rallies. That's kind of where the conclusion is drawn there. Now, the bottom line is as far as reversals happen, this is about as strong a bullish reversal as you're going to see. With all these little clues I've been kind of talking about, there is no absolute. There is nothing that can tell us for sure the market is going to rally from here, and so that's good, and you have to understand that because there's a tendency, particularly newer traders, that maybe you're brand new and you don't understand anything I just talked about because you haven't been in the classes and you haven't learned some of the lingo and some of the things I point out on a weekly basis. That you're saying, well, Jerry is so confident that this is a bottom, I'm just going to go all in. And you go all in and you don't have a plan for your trades because they're all going to go up anyway, right? And then what happens if something happens in tomorrow and we reverse this? If we reverse today's bullish reversal tomorrow, that's very bearish. That wipes out that momentum. It completely wipes out that momentum, and it means you got to get out of everything at that point. Well, if you didn't have a plan for your trade because you were just listening to the fact that Jerry said the market should go up and there's a strong probability the market rallies off of this, then you could get hammered. You get wiped out. So you can never know exactly what the market's going to do. You have to respect that. You have to. Now, there are times, days like today, where I get excited because I've been waiting. We've done nothing for 2 weeks because we've been waiting for this. But this is exactly why we have that cash available so that we can take advantage of a day like this. That we can wait till the selling might be done and there's more likely that buyers are going to come in, and we can get in a little bit closer to the bottom of some of these trends. Chip stocks, nice bullish reversal day. Again, these tend to be a leading indicator of the market. Nice to see that they had that same bullish reversal today. Transportation stocks, not quite as strong a bullish reversal, but it is looking like a little bit of a hammer candlestick formation. I'd like to see it close above where it opened today. That'd make it a very strong bullish reversal candle if it can do that. But it's pretty close. All right, so let's look at some stocks within some of these sectors, and then I'll go over what I'm adding to the list here. Now, I'm going to spend some time in the computer technology sector. It's down here a little ways, so it's not at the top of the list. And part of the reason is I've already got a lot of stocks in the watch list that are at the top of the list, up in this area right here. We've done that over the last few weeks, and there are a couple of trades, I believe, from the watch list. Well, I'll go through the watch list. I'll show you a couple ones you could consider out of that list. But because of the strength in the NASDAQ, I'm expecting that it could have a stronger comeback here. So I went into that area. One of the ones I like, I may add to the portfolio, is this Upstart Holdings. It's a 96 strength rank, UPST. And I can turn the signals on here in a second, but they had a good earnings report recently that spiked the stock up right there, and then it pulled back and then had this bullish reversal candle today. Now, in a lot of stocks, what I've been looking for is did we drop down on the sell-off but not go below the recent low? So here was the lowest point down here. In many cases, it's going to be that January 24th low, which was the case right here. So the market went below that January 24th low, but this stock has held that. It's held it for a while, even through the selling through here. It held it. Bullish reversal candle here. I'm expecting that maybe this stock is turning the corner. Now, on some of these, they don't have the buy signal yet. You can wait for the buy signal. Because I know how to read the price action and the candle and the context, and that's why I'm talking about the context here, I'm going to be a little bit more aggressive on some of these in getting into them. Now, it's because I can. I know how to read this stuff. If you're not yet at that level, then there's no reason why you can't wait for the buy signal as confirmation. It might mean you get in a little bit later, but there again, I might not be right on this. I may not get the rally off of this, and it could roll over and stop me out where you wouldn't have gotten in the trade because you were waiting for that confirmation. So when it comes to entries and aggressive entries or confirmation entries, there's never a right or wrong one. It's just, you just have to understand the pros and the cons of each of them. You have aggressive entry. The pro is that if you're right, you got in earlier, you'll make more money. If you're wrong, you're going to get stopped out where someone else might not have even gotten in because they didn't get that confirmation. Benefit of a confirmation entry, you're more likely to get the trend right because you got that confirmation. It's more likely going in that direction. What's the downside is maybe you're not going to make as much money as you would have if you've been a little bit more aggressive. So there's pros and cons. That's all there is here. But I just don't want anyone jumping on me that I didn't wait for the buy signal, because I will say all of these. You can wait for the buy signal as your confirmation, particularly if you don't know how to read price action. But hopefully, if you're in these classes, you're learning how to read price action, because I go over it in almost every class. I'm showing you some sort of candle formation and teaching you candle formation. There's trainings on it in those videos on the YouTube channel, and so there's plenty of data there to help teach you the things I'm going over in class, and things I'm learning and that I already know and I'm applying. Another one I like in computer and technology is Datadog right here. 94 strength rank, DDOG is the ticker. Again, this just barely went back to a hold signal, but again, I like it opened down here. It's looking to close up here, looking to be in a bullish engulfing pattern if it holds right here. I like the kind of the bowl-shaped move right here. It's pulled back. It looks like it's going to reverse back up. Has potential to get back up to these highs, maybe not immediately, but it could work its way back up to those highs. This is what I'm going to get into on a trade. And by the way, on all these trades, I'm going to be using the lows of the day as a quick tight stop. We should go below those lows. If we do, it wasn't a bullish reversal, and get me out of the trade at that point. But if I'm right, it's going to be a tight enough stop to where, I won't lose very much if I'm wrong, but I could make a lot if I'm right on this. Another one under computer and technology is this SYNA, Synaptics, 94 strength rank. Very similar. A deep pullback right here. It's moved up. It's pulled back again. Bullish reversal candle. I'm going to put a stop below that. And maybe this is just an ABC pattern that corrects this move down and then it drops slower. That's a possibility, but at least I could get, maybe get this little bit of a rally before it rolls over. Because I don't know yet if this is just another one of these bounces we have for a couple of weeks and then things roll over and we do end up going even further to the downside. Again, we can't know where the absolute bottom is, and there's always a possibility it could retest the lows or go even lower. But now you go back to really the state of mind I've been in since that last bounce. And remember, I never really trusted the rally back up. It didn't feel like we bottomed the last time. It didn't feel like we had enough of these check marks to feel comfortable that we had bottomed out, and it wasn't surprising that we came back and retested those lows, and in many cases exceeded those previous lows. And again, it's always possible we could do it again here, but I'm going to manage that risk. All right, and then two more here. One is Juniper Networks right here, JNPR, 92 strength rank. Now this has a sell signal off of the sell. Remember, it opened down here. It's trading up here. This looks corrective though. I like this little V-shaped move, and then this looks like a correction with the bullish reversal candle. I'm not going to trade this one though, just because I'm not going to have everything in computer technology. I'm going to spread it out over some other trades as well. But you could either wait for that to go back to a buy signal, or you could trade this with a stop below today's low. If you want to trade that one, I like that pattern there. That looks like it should go higher. And then the last one under compute technology is I dipped down on the strength rank, but I wanted to get the name. I wanted the name to trade on this one, but it's let's see, where is it? No, it's AMD. Has an 83 strength rank. Now, remember, I already had NVIDIA in the watch list. I actually got into that yesterday. Or did I get into it this morning? Maybe I got into it this morning. Must have been this morning, because we didn't have the bullish reversal yet. So I also wanted to add NVIDIA there. Again, you've got a kind of a V-shaped bottom here. This is more corrective. This would be a very deep retracement. But if the market is going to rally from here, especially the NASDAQ, you're going to see chip stocks rally, and this is one of my favorites. NVIDIA and AMD always seem to attract buyers. And by the way, because they always attract buyers, if they don't rally sharply with the market rallying, then that would be a warning sign to me. So having a trade like this, it's also helping me read what I'm looking at. It should outperform. There should be money flowing back into these stocks, particularly chip stocks, and particularly the top chip stocks, AMD and NVIDIA. And if they don't, then that would cause me to really worry. If chip stocks start rolling over and the market is still going higher, that's a big red flag that maybe this rally isn't going to last very long. So I like to have trades like that sometimes that are that are signal trades. It's like, hey, if this market is healthy and going higher, these should perform. And if they don't, that's telling you something. I've got to be able to pay attention to that. Under basic materials, I like where is it? It's weird. It's not showing up right there. Basic materials, United Steel, 93 strength rank. Again, notice the V-shaped move right here, and then kind of the choppy pullback here, and then the bullish reversal candle way down here. A lot of support right down there too, where it gapped down to. Open down here, is trading up here. Looks like it can move higher, and then again, this would diversify a little bit, which is why I'm putting in the portfolio. We're not all in tech stocks. You could wait for it to go back to the buy signal. I'm being a little bit more aggressive with it, not only bouncing off this support, but having that big bullish reversal candle. And then business services, this is one that we already have on the watch list. This Hudson Global, 96 strength rank here. Again, it looks like it's pulled back in what looks like an ABC pattern, bullish reversal candle today. And hopefully that holds. I mean, if this thing fades, if the whole market fades into the close, that would really fill up a lot of question marks. I just don't see it doing that, but there's always that possibility that could happen. But as of right now, everything's been holding up pretty well today. But this is and then this is one you can wait if you want for a little bit of confirmation. Wait for it to go back to a buy signal as well. I'm going to add this one as well. I'll put the stop right below that low. All right. Now, I forgot to boot out some of those stocks in the watch list I was going to boot out last time. Just got sidetracked with something else. But, other ideas in the watch list here, other ideas you could consider. A lot of these oil stocks are looking like they're getting ready to go higher. SD, it looks like it's gone back to a buy signal right here. Nice consolidation right there. It's been up around $15 before, so if oil keeps going up, this thing should work its way back up to those highs. If you're looking for new oil exposure, that's a good one. CDEV back to a buy signal today. Again, the candle's a little bit bearish today, but the pattern is bullish. This looks like a consolidation. So in the near term, maybe it does come back to the lower part of this range and move higher. You could wait for it to break out of that range. There's a little bit of extra confirmation, but this one still looks good. I don't like SUM. I'll probably boot that one out. That might have been one of the ones I was going to boot out. NVIDIA, I got into again on the bullish reversal candle. This whole move looked kind of corrective versus that impulsive move up. You look at a longer term chart too. A lot of support in that area here. And like I said, I'm using the low as my stop. So, if it does reverse right here, I shouldn't lose very much if I'm wrong. I have a lot of upside potential there. I mean, if this thing gets back up to where it was just a couple months ago, if I'm getting in here and I'm stopping out here, if I'm wrong, there's that risk versus this potential reward, and maybe then some if you hold it longer. I like the reward to risk of where we're at right now. And I get it. There's a sell signal, and I get that. I'm just being a little bit more aggressive there, and I'm not saying you have to do the same thing. But again, what I said earlier, there's pros and cons. If this thing doesn't work out and you were waiting for it to go back to a buy signal, you never got in it, so you don't care. I would lose money, but I hopefully would lose just a little bit of money with that tight stop in betting that it was heading higher at that point. SM, again, still consolidating right through here. Could start moving up again, breaking out. You could wait for it to break out. AR is already starting to break out. That's another oil stock. FIX, I don't like this one. Probably boot that one out. TWI, nice bullish reversal on that one today. That'd be one I'd consider. Got the bowl-shaped move. This pullback here, and then that bullish reversal candle. Put a stop right below that. So this is definitely one that I would consider for a trade. I'm going to get into HSON. I already mentioned that one. LPI, just kind of moving side. I'd like to see it start taking off again. Been moving sideways for a long time. I don't want to be getting into it and have it move sideways forever. UPS, might get out of that one. OAS, MDTR, CLR, USO, kind of a big bearish reversal candle today. I maybe wouldn't enter on a day like this, but if it can pull back a little bit, give you another entry point. Devon, Marathon, RTX, aerospace, so defense stocks. Not, a little bit of a bullish hammer. That was a pretty deep sell-off right there before coming all the way back. I'd probably wait for another day or so of confirmation on this. General Dynamics, kind of same thing. This defensive stocks could be good entries here pretty soon. This one really fell apart the last couple of days. I'll probably get rid of that one. Alcoa's pulled back a little bit. Could give you another entry point soon. I'd probably stay away from retail. I see just too many headwinds in those stocks right now. Especially when there's others that you could probably consider. Murphy looks pretty good, although bearish candle, a little bit of bearish candle today. It's not too bad. DHX, and you had this kind of V-shaped move that pulled back, bullish reversal candle today. Could put a stop below there, and I mean, at the very least, it should get back up to this breakout area. If it can break out above there, it could really take off. I don't like that one. Don't like that one. NBI, I'm not seeing a very strong bullish reversal on that day today, so I'd like to see a little bit more. All right, so that's it with the watch list there. Again, I'll see if I can weed that out. I know I said I'd do it last time, but let's get to the portfolio. I did get out of Marathon Oil to free up a little bit more cash. I already had 3 oil stocks. I still am going to hold these because I don't think they've hit my stop yet. And I think oil could still move higher. Let's see. Let me double check that here. My stop, on Halliburton, it's very close. My stop's at $30.75. It's at $30.80. So we'll see. Devon, no, we're not near the stop yet. Close on Murphy. Not very close. Oh, this is an NVIDIA. So I added NVIDIA. All right, so I'm going to add, So I've got about 51,000 in cash. I want to add Upstart, Datadog, SYNA, HSON, X, and A and D. So that's 1, 2, 3, 4, 5, 6 stocks. I could put about $8,500 in each stock. So we'll try to keep to that amount on each one. So let's first pull up Upstart. Now, I think on this one, where was I going to put my stop? I was going to put it down. Well, we could just put it down below today's low. That doesn't hold. I'm going to be out. I want to be out of this thing anyway. So the low was at 101.85. You just say I'm going to just say 100. We'll use 100 as a stop. If I did 100 shares, that'd be 11,000. I'm going to be down to around 8,500. So let's look at 75 shares. That's at 89. About 70 shares. 70 shares is right there, right near 8,500. Risk per portfolio risk is 1.5%. That's right there. Usually I want to keep that under between 1 and 1.5%. Yeah, I think that's close enough. I think we're okay. I'm going to go ahead and, because you have your guidelines, you're never going to be exact with all this stuff. So I think that's close enough where we should be all right. So I'm going to purchase and go to my portfolio. All right, next one. Datadog. Stop below today's low, so about 142. I always just start with 100 shares and I adjust it from there, but that would be 15,000 in this. We got to go about half that. About 60, 60 is too much. 55 is right there. So our portfolio risk on this one is less than 1. So we're actually risking less on this one. So it's okay that we went a little over on the other one. Like I said, I'd like to keep that between 1 and 1.5. What this is it's telling me how much of the portfolio I'd be losing if I get stopped out. And this tells me the dollar amount. So if I get stopped out, I'm looking to lose about $668. Now, this is important because as you're going through this analysis, you better be okay with that. If I'm going to put this much money in the trade and manage it this way, not all these trades are going to work out. So if that freaks me out and I could lose $668 if I'm wrong, then you need to reduce the size of the position. Even though the numbers say you're looking okay, if I can't handle that loss, I got to get that. Then I got to focus on that. I got to get that amount down to a level that I could handle. And so maybe we have 55 shares. Maybe I do 25 shares, and I say, okay, I can handle a $304 risk. Okay, then that's what you should go with. That should be your trade. Because you've got to be able to accept the risk. I can handle that $600 risk there. So I'm going to go with the 55 shares. Let's go ahead and purchase and go to my portfolio. All right, next one we're going to do, let's do US Steel X. Stop below today's low. So we're looking at 23. Wait, the low was 2190. So we'll say about 2160. 2160. We'll use 2160 as a stop. So we could do I'll do about 350 shares. Portfolio risk. Yep, we're good there. All right. Next one is SYNA. Putting the stop below today's low. It's about 197. Is that right? Yeah, 197. Okay, so let's see, 50 shares, still too many. 40 shares, it's right there. So 40 shares. All the other numbers look good. All right. HSON is the next one. And I'm going to put the stop below today's low, so about $27. That's right at that 8,500. Yeah, everything looks good there. Let's go ahead and purchase. All right, and how much capital do we have left? We've got 9,300. And so AMD was the last one. Stop below today's low, which was about 114. Oh no, 104. Low, 104 was the low, 104. It looks like about 80 shares we can get. It's 8,800. Portfolio at risk. All that looks good. All right. So I'm loaded up now. And we have $500 in cash available. It's all right. All right. So now, if this is a nice bottom here, that's why I saved all that cash is to take advantage of that. Now, really, if everything reverses right here, and we have pretty tight stops on these to where we take a hit, but we're not going to get wiped out if we mistime this. But like I said, I didn't just guess at this being a bottom. I looked at the charts, I looked at the VIX, I looked at the sentiment, I looked at the support levels, resistance levels, and then experience from being through a number of these things. This is typically a day that tends to be a bullish reversal day, and we'll see if that plays out. And if it does, then that's why we do these classes, that you were able to do it live and see it live and experience it live, or even if you did the recording, you're able to learn from that. Every time you make mistakes in trading, you got to learn from mistakes. You got to learn, when you do things wrong, how to do it right. and and that's, it's part of the process. You can't come into anything and know everything about it. The thing about people that are running companies that have been with the company for 30 years, it's like that they've screwed up so many times that's why they're so smart. You're a genius because you made so many dumb mistakes and you've learned from those mistakes. That's the key. People that don't learn from the mistakes don't last, but people that learn from the mistakes are the geniuses later on, and the wise people later on. Well, you don't get that. We're not born wise. You're born normal, and then you get beat up, and that's how you become wise. So the point of these classes is to help you shortcut. I'm not going to eliminate every dumb mistake you're going to make, but if I can shortcut a little bit, and there's a lot of the mistakes you can eliminate right off the bat and just deal with some of the ones you're just going to have to deal with, it makes all the difference in the world. And having experience through something, I could talk about what a bottom feels like for weeks and weeks and weeks, and you still wouldn't know what that feels like until you're in it. And maybe today one of the things you were looking at was, why is Jerry so bullish today? How can he be bullish? The world's falling apart and the market's selling off, and it was down huge, and it's come back a little bit, but it was down big, and who knows, it can't drop again tomorrow. Well, again, if you learn about price action, you learn about human nature, you learn about trading behavior, you can take advantage of it. And sometimes you have to get experience at first. I got beat up in the internet bubble burst of 2000. I got wiped out, and but I learned so many things during that period of time that anytime we had bubbles again in the future, I recognized them immediately, and I was able to profit from them. And I was able to recognize tops and get out before the collapse. And we did that here. We recognized topping behaviors and we got out. We went to cash, and it didn't seem like the right decision on a few days where, the markets were still kind of moving higher, but we preserved that capital. And if things do rally up from here, you're going to be able to have all that experience of what that's like, and you'll be able to apply it later on, and hopefully being able to do it without the pain that I had to go through to learn some of these things. So anyway, let's hope this all works out, and hope we're on the start of a nice old rally here. I don't know if this is going to be a major rally, but even if it lasts just a few weeks, we should be able to do pretty well with it. If we do now, I don't want to be so locked into this belief that we're bottoming out right here that I won't recognize topping behaviors, or the fact that maybe we shouldn't be confident in the rally. We'll definitely be looking for those clues. If we see them, we'll make decisions, tighten up stops, or sell out of positions, go back to cash if we have to. But that's why we do these classes each week, is to help kind of teach you the process. All right. Have a great week, and we'll see you Tuesday for the next market update. Bye, everyone.